one is that we need to lodge tax returns every year. And the financial year here is from 1st July to 30th of June. And if you do your own tax return, then you need to lodge by the 31st of October every year. But if you get the tax agents to lodge, then we have extensions. But for people that say they never appoint a tax agent before, then what they need to do, they have to come and see the tax agent before the 31st of October, and we have to add them into our list, the tax agent portal, before they can get that extension. Because if they say they don't lodge the tax return by the 31st of October, and they never appoint the tax agents to do their tax before, and they come to you, say, in January, then they're already late. So you have to warning them that, sorry, like we can do your tax, but you are late. So you're going to get the late payment penalty. So basically what I'm trying to explain here is like, we encourage people that if they never appoint tax agent, they should come to us and we lodge the form so they get extension. So we can get up to like, every year we get it up to for example, for individual, we get it up to the 15th of May. But if it's a new entity, like if they just set up a trust or set up a superannuation fund, then they can only get it up to the 28th of February. Or some people, if they're in a higher tax that they have to pay, and it's got like a different level, and the tax office sometimes say they have to lodge by March. So what we have to do is like for every tax agent, we can access the tax agent portal to check that the date, the due date of each taxpayer. So we can check like what day is the tax is due. And it's not automatic. Like you can't make assumptions, say, oh, everyone can get up to 15th of May. Because if you give the wrong information to the client and they assume that, and they give you the information very late, and then they get penalty, then they're going to get very upset. So we have to check the tax agent portal to make sure that the due date is, and then we always tell them, we don't tell them that due date, we tell them like 2 or 3 weeks before then, and then, because to make sure that they give us, not give us to the last minute, the record. And you can lodge the tax return by paper or by ELS. I mean, basically nowadays, we just all lodge by electronically. Because if you lodge electronically, the people can get tax refund faster. Like normally they promise like 14 days. But if you lodge by paper, it will take like 6 weeks or 8 weeks or more. And you don't know where the paper tax return gone. So virtually, if they come to the tax agent to do the tax, we just use the computer to do the tax return. And then we just lodge it by ELS, by electronically. So it's very simple. And then after they lodge the tax return, then they will get a notice of assessment. A notice of assessment, you can put it this way, it's just like a thank you note, hey, thank you for lodging your tax return here, you owe us money or we owe you money. So if they owe you money, that's a tax refund, then you're happy, you got the check and, you be happy. But if you owe them money, then you're going to be you have to pay that tax back. So it's like a thank you note. It's just a confirmation to say how much gross income you earn, how much and it's sort of summary of what you put in your tax return. And one of the important thing in Australia here is like, because it's a self-assess, that means like you just do your tax return and you lodge it, and you think it's a self-assess, and they will just accept it. But they're going to come and audit you. If they find out that you make a mistake, then you are guilty unless you prove yourself innocent. So it's really, really hard. Like if they amend your tax assessment and then you have to go back and prove that they are wrong, then you have to come with all the evidence and receipts and everything. And just like, what Derek just asked me about the house, if I move back and move in, like you can assess yourself to say that I don't have to pay capital gains tax on this because I'm qualified. But at the end of the day, you have to have all your paperwork, your documentation, your receipts, your proof, your evidence, everything in sort of like everything match up for them to believe you. And if they don't believe you, even though you say you are right, they still can say you are wrong. Then you have to pay the tax back. So you have to prove yourself innocent. You are guilty unless you prove yourself innocent. So that's how the tax system here works. It's a self-assess. You just assess yourself. You think you're right and you do it. But if they think you're wrong, then you're in trouble. You have to prove that you're right. And so that's how the tax system here works. So that's basically is like for the tax system here. So it's quite simple. You just work out all your income, all your assessable income, take away whatever you can claim as a deduction, comes out with your taxable income. Then you pay the tax on that plus Medicare levy. And if you already pay the tax, you get the money back. If you pay the tax more than what you're supposed to, you get the money back. If you don't pay enough, then you have to pay them. And if you do it wrong, then you're in trouble. If you are a salary and wages earner, then virtually I already explained this to you, but I'm going to say it again. If you are an employee, then at the end of the year, the employer will give you the PAYG payment summary. You make sure you declare all your assessable income, and then you're claiming all your allowable deduction. That means that you have to keep all your receipts. They're not going to check your receipts. They're not going to check that whether you actually make the expense or not. But when they come and check on you, when they come and knock on your door, you better show them. You have to be able to substantiate that you have those expenses. Otherwise, they can knock it back and say, sorry, you can't claim that. And if you can't claim that, then you're going to pay more tax. But not only that, they're going to plus the penalty. And it depending on whether you're intentional to cheat or not and all that. And they can penalize you up to 95%, which is double, your tax that you have to pay, plus the interest that you have to pay. It's a lot. It's a lot of tax. And so you lodge your tax return, you're claiming your tax refund and payable. So just repeat it. If you pay more tax than you have to, then you get tax refund. If you don't pay enough, then the tax office will send you a bill and you have to pay them. So the notice of assessment is just like a thank you note, Thank you for lodging your tax return. Here you are. Here's your bill. You pay us more. You haven't paid enough. Then what happens is that because it's a self-assessed, then you will expect that the tax man, once a lifetime, everyone will get this. The tax office will come and audit you, and when they come and knock on your door, then you have to be prepared. It's a self-assessment, and so you're guilty unless you prove yourself innocent. And if you are not sure of something, then it's better that you apply for private ruling. Basically, what this means is like you just ask for their permission. Say, hey, can I do this? And then let them give you a letter to say yes, you can do it. And then you keep that letter. And then in case if they come and audit you, then you can show it to them that you tell me already that I can do it. That's why I did it. So you can't penalize me, So you can apply for private ruling. But there's certain paper by the solicitor that what we call is a legal professional privilege from the lawyer that they can't look. And sometimes that's why it's better to get the paperwork from the lawyer. But from the accountant, they can look at everything. They can look at the working paper. They can look at everything of our. We don't have that. Don't think that you did it right. They will amend your assessment. And if you don't agree, then you have 60 days to object. And then for small business, you have up to 2 years.
I have a question.
Yes.
You mentioned there, for launching the tax, for do-it-yourself, the deadline is on the 31st of October.
Correct.
Then if you get a tax agent, you have until May 15th of May.
Correct. Of the next year, of the following year.
Of the foreign year. What if you do it yourself, you send it on before 31st of October, and you realize you made a mistake and you'd like to have it back and make corrections? Can you still do that?
Yeah, definitely. You can up to 4 years. You can do your amendment. If you realize that you make a mistake, you can also engage a tax agents to help you to do amendment. Because sometimes people lodge their own tax return and they realize that, they forgot this or they didn't do this, and they can do it themselves to amend it, or they can get the tax agent to help them to amend the assessment. Yes, definitely you can.
Does it cost a lot to get a tax agent? Does everybody do this?
For personal tax return, it doesn't cost that much. No. Yeah, and everybody, I would say 95% people would engage the tax agents to do the tax return for them, because the fee they pay to the tax agent, they can get as a tax deduction. And sometimes, like if you don't know, if you don't have this sort of knowledge and what you can claim and what you can't claim, and you make a mistake, it's going to cost you more money. But if you go to the tax agent, they can ask you all the questions and they try their best to get as much tax refund for you as possible. So the money that you pay them, you can get some back, and not only that, you get more back because you get more tax refund. And if you do it yourself, you get nothing because you don't know how. And not only that, you're not going to feel confidence that you get it right. And if you make a mistake, you get into trouble. You know what I mean? So a lot of people in Australia, they will engage tax agents to do their tax return.
Yeah, thanks.
No problem. Thank you.
Hi, A.
Hi, who's that?
This is Joan.
Joan.
In
Hi.
relation to Gina's, do all tax agents a licensed tax agent?
Oh, yeah.
How do they? There are lists of licensed tax agents where you can have their contact and get their service. You have that kind of.
Yeah, well, basically in Australia, you have to be a registered tax agent to be able to charge a fees to do the tax return for people. So if you go to a people that they're not a registered tax agent, they are not supposed to charge a fees for doing the tax return for you. You only the registered tax agent can charge a fee to do the tax return. And whether the person is registered tax agent or not, they can easily check it online. They can go to the tax practitioner, the website, type in their name or their number, and then they will show that whether that person is registered or not. And if the people that not register, and then they help registered tax agent to be able to help people to do tax return.
Okay, thank you.
No problem. Thank you. What I would do is that you can send me anything that you want to know. Today's webinar is basically give you an overview of what the Australian tax system's like. But if you understand this will help you a lot. If you want to know more, like, hey, Eng, I want to learn this, or I can go into more deeper. And
absolutely, thank you very much, Eng. What a great! I hope you learned something, guys, and thank you very much, Eng, for that. We really do appreciate it.
You're welcome.
Thank you.
You're welcome. Bye.